Well, it's not good news, is it? Unfortunately, still necessary. They say the Reserve Bank's 13th interest rate rise may not be its last.
Let's bring in John Kehoe, the economics editor of the Australian Financial Review now. Good morning, Johnny. Now, how much of this rate rise is going to hurt households?
Yes, good morning, Carl and Sarah. Look, Michelle Bullock's first interest rate rise as governor, it is really going to squeeze households, isn't it, as we head towards Christmas. Now, if you have a $500,000 mortgage, it's going to add about an extra $80 a month to repayments. If you have a $1 million mortgage, another $160 a month. Of course, that's on top of all the other interest rate rises we've had since May last year. So, look, it will really be felt out there by a lot of households. There's no doubt about that.
Yeah. Look, a lot of people are saying that it's the rate rise we had to happen. But I recall, I think it was Paul Keating a few decades ago saying it was the recession we had to had to have. So, I mean, are we going to dip into a recession now?
I don't think so yet, Carl. I think the Reserve Bank's pretty conscious of not trying to crunch the economy too hard. I mean, there is definitely risks mounting if they don't get on top of this inflation outbreak that we have. But if you look at our interest rates compared to most other central banks around the world, believe it or not, they're still quite a bit lower. So I think we've got strong population growth at the moment. Some households have cash buffers, some don't. I think it's going to be those households, obviously, right at the margin who don't have a lot of cash savings that are going to be really feeling this one.
And it's pretty big of the new RBA governor basically coming out and saying she's not going to bow to political pressure.
Yeah, this was a big, bold statement by Michelle Bullock because we saw Treasurer Jim Chalmers say last week that he didn't think the increase in inflation was material enough, but the Reserve Bank thought that it was indeed material enough to increase interest rates. And it just goes to show that they're not going to be taking any marching orders from Canberra and that the RBA is independent of the government.
All right, Johnny, thank you.
Thank you, buddy.
Well, already struggling Aussies have been dealt another blow by the RBA, ending a 4-month interest rate pause. The cash rate rising 0.25% to a 12-year high of 4.35%. Today, correspondent Lara Vella is out on the streets of Sydney's inner west this morning. Lara, times are about to get a lot tougher for Aussies.
Brooke, good morning to you. They certainly are. The Federal Treasurer flagging that this latest rate hike is going to tighten the screws even further for so many Australians across the country, and that is certainly being felt across Sydney's suburbs. In particular, in Western Sydney, Brooke, economists are anticipating that 87% of mortgage holders in the suburb of Blacktown are going to run into financial hardship because, quite simply, they're going to have to be spending more than they earn. And the great Australian dream of owning your own home is drifting further and further away, particularly for those people on a single income. Chilling data from Finder suggesting that in order to comfortably afford a property here in Sydney, you need to be earning every single year $260,000. Bear in mind that the average wage for a single person is $96,000. So even if you've got a double income coming into your household, it's a long way off for being able to comfortably afford it. It is slightly more affordable, though, in places like Melbourne, coming in at $170,000. In Brisbane, you'll need to be earning $155,000. As for renters, Brooke, according to Finder, in the month of October alone, more than 40% of tenants in October struggled to pay their rent.
The numbers just don't add up, do they, Lara? Thank you.
Meantime, the Reserve Bank has hit mortgage holders where it hurts, raising the cash rate for the 13th time. Malarndirri Australians are going to be livid over this. Who are they going to blame? I reckon it's you.
Well, it's certainly very difficult for Australians across the country, and that rise, unfortunately, people were waiting to see if it would happen. We know that they were doing that even in the Senate here yesterday. It's not good, of course, Matt and Carl, but we are trying to do everything we can around the cost of living for Australians more broadly, and I've said that a few times with you just in recent weeks.
Yeah, but it's not washing. The last time the Reserve Bank was so aggressive, this country sank into the deepest recession since the 1930s. I think the Australian people are within a breath of losing faith in your government's ability to handle cost of living.
Well, we're certainly reaching out to them in other areas, as I've said before, you know, with health, with childcare, with rental, with electricity, and we are doing that. But naturally, we're going to also be looking today, and I know that Treasurer Jim Chalmers and my colleagues who are in the Cabinet are also looking at it as we lead towards the May budget. We know that this is a serious time, and let's see what our colleagues do.
Looking's not fixing. Matt, overseas pressure has been signalled as a reason for the rate hike. We all know that. So if all the pressure is out of our control, is raising rates the right call?
Well, you've got to ask the question: who's in charge of this country right now? Because this government has spent almost 2 years now with the power, but without taking any responsibility. They've always got someone else to blame. But you can actually see the government has made a massive error here in the fact that they're now this week starting to talk about cutting spending. They're talking about deferring infrastructure spending to help control inflation. Well, the question should be asked, why didn't the government do that in the budget 6 months ago? The time to act on inflation, we all knew this was an issue. Why didn't the government cut this spending to try and help the RBA with this task 6 months ago? They're now late to the party. They're playing catch up, and the people who are going to pay for the government's delays in action here is all Australian families. Some people will be facing an extra $15,000 a year on their mortgage. In fact, the average person will be facing about that a year on their mortgage. How are people coping with this?
Malarndirri, why did you wait?
Well, that's not the case. Let me correct Matt Canavan for a moment. We've been in for 18 months. These rises occurred well before we were coming in. We've had to make serious decisions about...
One of them. There was 13. One of them happened before you were in government.
Matt. I'll let you finish. We were able to make sure that there were rises in the pay rises for the care sector, for thousands of workers. We've been able to see over 560,000 new jobs in Australia, which wasn't there before. And that's the first time that's occurred. And we've certainly seen changes in our health system that the previous government had nothing to do with. So these are really important everyday matters that impact every Australian. So I did completely disagree with Matt Canavan.
Do you concede, Malarndirri, that this is going to hurt you at the box office?
Well, we know that this is difficult, Carl, but let me say that we've had to look at the cost of living impact directly on people on a broader sense, not just those here in southern parts of Australia, but also those in the northern and remote regional parts of the country.
Finally, Matt.
Well, look, we just need the government to act here. As I say, they're in charge. They need to take action. I've been saying for months on this show that we need to cut spending. In the budget of 6 months ago, the government actually raised spending through their own decisions by over $20 billion. It was the biggest increase in government spending outside of COVID since Kevin Rudd's days. And at least Kevin Rudd had a global financial crisis to blame. We were in a recession and he had to act, or the world was in a recession, he had to act. Now we don't have a recession, we've got inflation. We've known that problem for months. The government should have been cutting spending in their budget, they didn't, and now all of us are paying for their mistakes.
Some storm clouds gathering. Thank you for being on the show.
Thanks.
Appreciate it,
Thanks,
Sarah.
Carl.
Estimated 1.5 million Aussies will struggle to make their next mortgage repayment, with the cash rate rising to its highest level in 12 years. Let's bring in homeowner James Bradbury from Glenwood in Sydney. Hey James, nice to see you and your little one this morning. Not great news. Must be incredibly stressful for you.
Yeah, look, it is stressful. It's a bit of a death by 1,000 cuts sort of situation after 13 increases, where it certainly makes you feel the full effect of these things. And yesterday's increase is actually just the equivalent of a full day's daycare. Yeah, definitely feeling the effect.
So how do you navigate? I mean, that's an interesting comparison and equation for just looking after your bub. How do you work your way through financially giving and taking to manage all of this now?
Yeah, we have to be really intentional. There's no more of sort of just flippantly sort of spending on things here and there. We have to be really careful about what we're spending on and where we're spending, and really make those intentional decisions. There's previously you could also refinance and get some of these cashback offers to soften the blows of these increased rates. But now with a bub at home and mum at home taking care of him, those are a little bit harder as well.
You can't do that now.
No, it's a little bit trickier.
Yeah.
Being on the single income, it's not as easy to sort of move around and take advantage of those sort of cashback offers. It really is that death by 1,000 cuts kind of situation. It ratchets up the sort of level that it's at now is we've never seen in our lifetime. People my age, my wife and I, we've never been through that increased cycle of the 70s or the 90s or the early 2000s.
Do you blame anyone?
Like our parents have. So it's shocking. No, I personally think it's just part of the business cycle. It's just the modern world we live in where, interest rates control a whole bunch of things in the world. You just have to be careful to not overextend yourself. But even so, it can be stressful even if you haven't. So.
Well, we wish you all the very best, along with everything else, but you have possibly the cutest baby I've seen in a very, very long time. Look at that magnificent hair.
As you can see, he's blown away by the decision yesterday by the RBA as well. So.
Blew his hair back like everyone else. Hey, good on you, legend. Thank you so much. All the very best, Sarah.
What a beautiful bub indeed. Thank you, Carl.
Already struggling Aussies have been dealt another blow by the RBA, ending a fourth-month interest rate pause. The cash rate rising 0.25% to a 12-year high of 4.35%. This will add around an extra $76 a month to $500,000 loans and about $114 for those with a loan of about $750,000. Let's bring in today money expert Effie Zahos on the desk. Effie, good morning. A little bit earlier for you than usual. This is the RBA's 13th rate hike in a row. Is there an argument to this approach that it's actually not curbing inflation?
Well, it's a good point you raise, Brookie, because what we're seeing now is that, yes, inflation was heading in the right direction, but not fast enough. It was an expected move, but a controversial move. When you look at those items that are still facing inflationary pressure, even increasing interest rates may have little impact on them. So, for example, fuel, insurances, utilities. An interest rate hike is not going to actually relieve that pressure. It's not demand driven. What it will do, unfortunately, is affect small businesses as well, who are already under the pump with these high inflation costs. So the heading of a recession or going into recession is quite real.
While we've got you here, what sort of impact will this Optus outage have on small businesses, do you think? Well, we're hearing like point of sale could be affected, the whole network is out.
Everything. It's basically business is closed today for those that rely on the Optus network. And it's not just Optus, there are other carriers as well. Something that they clearly don't need, as we've just been announced a rate hike.
Yeah, absolutely. All right, thanks, Effie.
Hey there, Today fans. Sarah and...
What's my name again?
Oh my goodness, Carl.
Hey, thanks for watching our YouTube channel, though. Subscribe now for more news, special reports, and amazing Aussie stories.
And Carl misbehaving,
Whoa,
of course.
That never happens.
Always happens.
What's she talking about?
Always happens.